This week, we are rounding up our investment series with the dollar cost averaging investing strategy.
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all around financial wellness. Here is your host, Yolanda Rose.
It's another episode of the Wealth Nation podcast. Thank you for joining me. This is Yolanda, wealth coach and advisor. And as always, it's always my goal on whichever platform we connect on is to give you easy, actionable tips, content, and strategies that you can use to manage your money well.
The Wealth Nation podcast is sponsored by Financial Success Summit 2021. Now, this is a conference that I am putting together. I am getting the top folks in their industry, from a property to Bitcoin to formal investments, banking, short-term insurance, budgeting, all of the tools, all of the tips, all of the tricks, all of the strategies that you need to break free financially. I'm getting all these folks together in one virtual room that's happening on the 17th and 18th of April 2021. So if you want to get tickets to this event, go to the website. It's www.financialsuccesssummit.net and buy those tickets. Tickets are selling for just 99 Rand. And if you use this coupon code for a limited time, you can get early bird tickets. So go and shop for tickets. You're going to get a 60% discount and pay just 40 Rand for 2 days of power-packed financial advice. Use coupon code early bird at checkout. This offer expires on the 31st of January 2021.
Be sure to get your tickets to Financial Success Summit. We have some awesome speakers lined up. You're going to be hearing in a couple of weeks from Gray Jabesi. You've already heard from Silindile from the Saki Sizwe property Stockville. She's going to be speaking at the event. Kanta Naika, tax specialist. And as always, Daniel Lapin. He is America's financial guru. And you're going to hear some ancient wealth building strategies from him. So join us for that conference, Financial Success Summit, our very first virtual conference. So today we're rounding up on our series on investments, and we're going to be looking at the dollar cost averaging strategy. So what is this cost? So what is this all about? Well, dollar cost averaging, I know we're not working with dollars, it's a rand, but it's just a term. You know, these Americans come up with these terms. So it's the dollar cost averaging, but in your head, think about the rand cost averaging. So dollar is just a term for the currency that you're using locally. So the dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested over a period in an effort to reduce the impact of volatility on the overall purchase. So every month you're making, or whatever period you decide, every month, every 2 weeks, every quarter, every year, you're doing a lump sum, or whatever it is. But you have this period where you consistently putting money towards a specific investment to sort of buffer the volatility, because month 1, it could be low. Month 2, it could be lower. Month 3, it could be really high. So we want to average it out. And that's where the averaging in dollar cost averaging comes about. So in effect, this strategy will remove much of the detailed work of attempting to time the market in order to make purchases of equities at the best price.
Raising financially savvy children involves teaching them a variety of skills, from budgeting to planning to earning and saving. Besides giving them an understanding of the value of a rand, it prepares them for real-world finances. Financial literacy is a vital skill, and it is never too early to teach your kids about money. Many parents wonder how they can teach their kids about money and where to find age-appropriate resources. You can now purchase the Financial Literacy for Kids workbook, which is aimed at primary school kids. It's now available at www.financiallyfabulousfemales.com. This workbook provides you with 12 lessons, activities, lesson plans, discussion points, and quizzes that you can use to test your kids' knowledge. Shop now at www.financiallyfabulousfemales.com.
Like what you hear so far? Make sure you never miss a show by subscribing on Apple Podcasts, Spotify, or Tuned In. Now back to the show.
So the dollar cost averaging is also known as the consistent dollar plan, or in our cases in South Africa, the consistent rand plan. Now, this tool an investor can use to build savings and wealth over a long period of time. And it's also a way for us as an investor to neutralize that short term volatility in the broader investment market. For example, of a dollar cost averaging, if you have a pension or provident plan, you are applying the dollar cost averaging because every month you're making contributions to this plan. So whatever your pension or provident plan at work, whatever they're investing in, you're buying it at every month and at whatever level it's at. For example, let's say you have a fund at work, and I know a lot of the times you guys are not paying attention to what it is that you guys are investing in. So please pay attention to whatever funds that the pension or provident plan is investing in. So let's say they're investing in Allen Gray Balanced, which is a Regulation 28 compliant fund, which all retirement investments need to have in South Africa. And let's say at month one, one unit in this fund is 105 Rand. The next month, one unit is 120 Rand. The month after that, the unit is 98 Rand. All right. So whatever it is, whatever fund, whatever the price is, every month you're making these contributions. So this is an example of the dollar cost averaging. So whether you know it or not, and if you have a pension plan at work, you most likely applying the dollar cost averaging investment strategy to your retirement savings. The dollar cost averaging refers to the practice of dividing an investment of an equity up to multiple smaller investments of equal amounts spaced out over regular intervals. The goal of this method is to reduce the overall impact of the volatility on the price of the asset that we are investing in, as the price will most likely vary at each point in time that we make these investments. So the dollar cost averaging aims to avoid making the mistake of making one lump sum investment that is poorly timed with regard to the pricing of the asset. And the perfect way to think about this is retirement savings. The general idea of this strategy assumes that the price will eventually rise. And by using this strategy, an individual share or unit trust or ETF for that matter, without knowing about the company's details, could be very dangerous because the strategy may encounter an investor to continue buying more shares at a time when they should simply be exiting their position. However, when you invest in unit trusts or ETFs, it's a bundle that you're investing in. Unlike when you're buying shares, it's just the one investment that you're going to, so the risk is higher. So it's not something that you need to worry about if you are in the unit trust space or the ETF space. But for the less informed investors, the strategy is far less risky, especially on the index funds, the S&P 500, the MCSI funds, and all of those kind of indexes. It's a no-brainer. It's dollar cost averaging. That's where you want to be. So investors that use this type of approach will generally lower their cost basis in an investment over time. The lower costs will lead to less of a loss on investments that decline in price and generate greater gains on investments that increase in price. The key advantage to the dollar cost averaging is that it reduces the effects of investor psychology and market timing on their portfolio. By committing to the dollar cost averaging approach, investors avoid the risk that will make counterproductive decisions out of greed or fear, such as buying more when the price is rising or panic selling when the price is declining. Instead, the dollar cost averaging forces investors to focus on contributing a set amount of money each period while ignoring the price of the individual purchase. So that's a roundup on the 4 investment strategies that we've had. Wealth Insiders, check the membership. We've put out some really nice, simple, easy to digest videos on value investing. So once you've narrowed down on your strategy, and I feel as beginners, one of the best approaches you can use is the dollar cost averaging and the value investing strategy. But whatever strategy you decide, as long as you understand what the requirements are and you're willing to go all out on that particular investment strategy. Try to figure out how much of money you need to cover for your investments. That includes how much you can deposit at first, as well as how much you can continue to invest going forward. You'll also need to decide the best way for you to invest. Do you intend to go a traditional financial advisor or broker route? or the passive route where you're on your own, you're taking an index fund approach. So if you're ready to get cracking on your investments, reach out. All right, I can give you some advice, point you in the right direction according to your risk appetite and the type of strategy that you are geared towards. All right, so that's it for me on this episode of the Wealth Nation podcast. Be sure to get your tickets. It's the last week for early bird tickets, so I don't want you to miss out and pay the full price. So get your tickets for Financial Success Summit 2021.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.